Hello, everyone. Welcome to Real Estate Investing TV. My name is Delphine. Today, our guest is Adam Lacey. How are you, Adam?
I'm doing good.
So tell us, when did you start thinking about generating passive income and why?
I am a civil engineer by trade. I've been an engineer for about 10 years now and have started in the last few years to get more serious about investing money, planning for retirement. And really, for me, I realized a few years ago that investing in your typical 401k through my company's retirement plan just wasn't really providing the returns that I really wanted. So I started looking at alternative investments. I started looking at franchises. I was looking at opening Jimmy John's and a baseball training facility franchises and different types of investment opportunities to provide passive income. And that's really when I kind of stumbled into real estate and realized that for what I was looking for, I think real estate was a good fit. And specifically multifamily investing in general could provide passive income that would really allow me to not only see types of returns that I was more aligned with what I was looking for, but also possibly allow some flexibility in my life with different streams of income rolling in that weren't necessarily dependent on me trading my time for that money. So real estate investing is really what I've chosen to kind of focus on to try to develop that passive income.
You live in the beautiful Denver. How are you doing there during this time?
Yeah, I have. So yes, I'm married to my wife, Katie, and we have two sons, Nolan and Clay. Nolan is 6 and Clay is 3. So anybody with little kids, Delphine, I'm sure you remember, it's chasing them around a lot. It's running to parks, and obviously COVID has changed what we do a little bit. We're spending a lot more time at home, but also outside, and where we can kind of still have some fun, get them out of the house with some socially distanced fun. But really, it's running around with them. I guess right now we're not really taking them to sporting events and things like that like we used to, but hopefully that'll return soon. So really, it's finding trails, it's going to parks, it's playing around. We got a little bit of snow here in the Denver area last week, so I was able to take the kids sledding. So that was fun.
We need to adapt to the new reality, right? For you and your wife, as well as my husband and I, we treasure the time we spend with our loved ones, especially with our kids. During this pandemic, we can see the other person walking from a family room to the basement or from a family office to a living room. So when the pandemic is over, what do you wish to do as a family?
Yeah, that's a good question. My wife and I both enjoy sports. So, going to a baseball game or something like that, something we'll definitely look forward to. But as far as vacationing goes, I mean, I have a sister that lives in California. I'd like to take my boys out there, spend some time by the ocean. The mountains are great. We're surrounded by mountains here in Colorado, but it's when I vacation, I like to get by water because I definitely miss the water.
That's awesome. The best gift we can give to someone is your time, right? The activities that you and Katie like to do sound very exciting. We all wish we had more time to do more of it and enjoy life. So where do you wish to travel to when you have more time?
I'd like to go to Australia, New Zealand, somewhere around there. Never been to Europe, so I'd like to visit Ireland maybe. And there are even a lot of places within the States, Yosemite National Park, Glacier National Park. We like to get outside and get the boys outdoors a little bit. So just finding some national parks and things like that we haven't been to would be a lot of fun.
Very nice. Australia, New Zealand, you definitely have big plans for outdoor activities. Now, the question is just about how to find the time and the money to support our dreams. I know you are a good planner and you are already created multiple streams of passive income to support the lifestyle that you want for your family. One of your investments is the 401k from your engineer job. Please tell us, how is it performing?
My 401k. I should probably be monitoring that more closely. But yes, I mean, as you probably know, stocks have actually been pretty well during this whole COVID thing, so that's fine. I mean, my investments in my 401k are kind of spread over some pretty stable, structured mutual funds and things like that. So it's doing all right. It's not necessarily seeing huge gains, as if it was just playing in the stock market and investing in stocks by themselves, but it's doing fine at the moment. But as you know, that can change any minute.
Besides via 401k, do you invest in the stock market on your own?
A little bit. I like to invest in things that I really understand, and I have not really taken the time to fully understand the stock market. So I do have some stock. I have some Tesla stock, some Amazon stock, a few other things like that. But most of my money that is in those types of vehicles is in more of a mutual fund type of situation.
Congratulations. These stocks are performing great right now. I totally agree with you that none of us should invest in something we do not fully understand. Diversification is a good strategy. So a small portion of our money goes there. However, for the stock investment, I tend to set and forget, just like you. I don't check it regularly. I just leave it there for the long term. As for your investment in real estate, what type of real estate are you investing in?
Yeah, so I, through this journey, looking at many different avenues in real estate, as you know, there's a lot of different ways to invest in real estate. I decided that the best bet for me, at least passively, was to invest in multifamily syndications. I think it's not only stable, but you can also see some pretty big returns. So actually what I did is I rolled some money out of an old IRAs and 401ks from an old job into a qualified retirement plan that allows me to use those funds to invest it allows me to use those funds to invest in a lot of things. I choose to invest in multifamily with those funds. So I'm invested in a 40 unit apartment complex in northern Denver. And then we just closed on a 200 unit apartment building in Montgomery, Alabama.
Why did you choose multifamily investing instead of REITs or note or private money lending?
Sure. So, multifamily investing, I think there's a lot of great things about multifamily. One being historically, just looking at it statistically, I mean, it's a very stable asset that does well during all points of the market cycle if bought correctly, and with some instability we might have going on right now, I think it's one of the safer places to be. But specifically, when I'm investing in multifamily deals, I'm looking at value add opportunities, and I'm looking at opportunity or apartment buildings that are mismanaged, run poorly, maybe rents are artificially low, just something where there's an ability for the operator to come in and force appreciation. And I think once you have that ability to force that appreciation and you're not relying necessarily just on the market to appreciate for you, there's a lot less downside there. I mean, as long as you trust the operator and that they're going to come in and pull off the business plan as they laid it out or hit very close to their projected targets, there's just not a huge downside there. And at the same time, there can be some good upside as long as, they can find the deal. So I think for me, being able to invest in apartment syndications with people that I personally know and trust and have talked to many times. And, obviously, as a passive investor, you're not completely behind the curtain, paying attention to the day-to-day details, nor do I really want to be. But I know at the same time, if I have a question with something going on, I can send a text message to the operator or send an email and just check in on the investment and see how it's going. And if there's an issue comes up, they can, I can ask them point blank, what the plan is to mitigate any of those concerns. And so there's a certain level of involvement and control there that I guess I like, as opposed to just investing in a stock market or in a REIT or something that you're completely distant from. And frankly, you don't even know the people that are operating the business plan on a day-to-day basis.
Thanks, Adam. Investing in multifamily syndications sound like an attractive alternative to the more mainstream options. So the sponsors play a very important role in the success of the syndication. How can somebody find a sponsor multifamily syndication to passively invest in? Can you share your experience?
It's a good question. I mean, I think it's very important to vet the sponsor. As I mentioned, being able to trust them and have kind of a relationship with them, I think is one of the great benefits to investing in these syndication type of deals. So I've met operators through networking events, through multifamily meetups, your local real estate association. Now, things are a little different right now that we're not having a lot of in-person meetings, but there's plenty of virtual meetups going on where you can meet these operators. Another great way to at least get started is almost all real estate investors these days, well, at least a lot of them, have their own podcasts and their own blogs and forums like that. It's just free and easy to go ahead and download a couple podcasts from a few different operators and just get a feel for who they are, how they talk from there. And then a lot of times there'll be an opportunity for you to go to their website or find them on LinkedIn or other forms of social media and just reach out and connect. And most of them are very happy to jump on a phone call for 15, 20 minutes and you can kind of get to know them. And I would highly recommend doing that before you invest with anybody. Have multiple conversations, get an idea of what their past deals look like, talk to them about underwriting. And I guess if you got to stay within your knowledge base, I mean, but if you understand kind of the ins and outs, how some of these things are underwritten and how all the numbers play out, then I mean, you can go ahead and ask them questions about certain target numbers and how they're estimating rent increase and timelines for rehabs and things like that, and just get a feel for how they operate. I think that's the best way.
Thank you for sharing, Adam. Researching profiles on LinkedIn, listening to sponsors' podcasts, watching their YouTube channels, and even meeting the sponsor in person ways one could find potential sponsor and syndication opportunities. But with so many around, how can you determine an opportunity is better than the other?
Yeah. So I'd start off by getting to know a few of them, as you mentioned, identify a few, 3, 4, 5, however many you want that you think you would potentially be interested in investing with. Start getting on their email list, get on, so you're seeing their deals. And then, I would be careful and really review what they send and make sure you like the deal. So just seeing a lot of deals in front of you and learning as much as you can about them. And, once they do send you a deal, reach out to them to talk about it a little further. Maybe make sure you have the full background on why, the seller is selling and what the value play is here. And just make sure you not only understand, but kind of agree with their approach.
How often do you see investment opportunities? Do sponsors have deals all the time?
Sure. So generally, you'll build the relationship with the operator. You'll start seeing their deals. Once you find one that you want to invest in, usually you'll obviously there'll be a period where they'll be taking kind of soft commitments where you can tell them, yeah, you're interested in investing X amount of dollars. A lot of times they'll put together a webinar or put together some type of presentation to really go over the business plan. And then when you when you're ready to go, if you are ready to pull the trigger on the investment, they'll usually send out some documents and you'll have to sign those and then wire the funds over. And a lot of times that'll all take place during their due diligence period or just prior to closing. And then once they close on the property, that's usually kind of when it goes official and the business plan begins, and the fund begins. So usually you'll get to sign up on their mailing list, and they might not have a deal right away at all. But if you get on their mailing list, that'll give you the opportunity to see the deals when they do come out. I mean, these, as you know, a lot of these deals are larger deals, and they're not sitting there every week. The operators that are truly vetting these deals the way they should be are generally only getting a few a year at the most. So you just have to be patient. And that's why I would suggest getting on multiple people's mailing lists and just start seeing some deals come in. And hopefully after you see a few of them, you start to see one that you really like and it's worth investing in.
You mentioned that you prefer the value-add deals where the investor acquire an asset that needs improvement. In that scenario, the asset management team need time to execute the plan to add value to the property. How long does it normally take?
It just depends deal to deal, but generally with apartment syndications, you're looking at somewhere between a 3 and 7 year hold. So I guess that's important to know. It's not going to be like flipping a house where you're going to get your returns back in 6 months. You should plan on having your money illiquid for at least three years, but depending on the deal, probably closer to 5 to 7.
So 5 to 7 years. In reality, some investor may have a situation in year 2 or year 3 and need to pull out prematurely. How does the syndication help them out?
So it's going to depend on the deal. It's going to depend on the operators. I know some of the guys that I know that are operators will try to work with those situations. Sometimes you can find another investor to come in and buy their shares out. Would be common, as long as the deal's going well. A lot of times it's not that hard to find somebody to buy out your shares. But again, I wouldn't go into a deal assuming that you can get out, because sometimes that's just not going to be possible.
Thanks, Adam. What are the investment metrics you use to evaluate an investment opportunity?
Yeah, I guess so. There's a few different metrics I like to look at. One being one of the easier things I think to look at is just the equity multiple. And I think a lot of times in syndications, you're seeing the equity multiple at the end of the business plan to be, above 1.8, a lot of times right around 2. So, you're essentially doubling your money through the end of the business plan. Obviously there's cash flow involved and generally a larger lump sum upon the refinance or sell of the property, but an average cash on cash return, I mean, you should see above 12%. I mean, a lot of times you're looking at an internal rate of return of above 14%, ranging from 14 to 20, depending on the deal itself, at least from a projection standpoint.
Okay, let's talk about the risk involved with investing in multifamily syndications compared to other types of passive investing and how you would mitigate them.
So like any investment, there's risk involved in multifamily, just like anything else. I think there are important things to note, the ways to mitigate risk in multifamily. One of them is we talked about earlier is, you're able to vet the sponsor, like you can know the people that are operating the business plan. So if you trust the person and they have experience doing this exact same thing before, you're really just relying on these people, these professionals, to operate their business plan accordingly. And a lot of the control is in their hands. And when you're doing a value add play, it's not as dependent on what's going on in the world around us as it is just being able to come in and operate the business plan and, rehab the units and fill them up and, raise rents if that's part of the business plan, start collecting pet fees, whatever it may be, to try to increase revenue. You're really just relying on those people to do that for you. So that's why it's important to vet the operators. I mean, I think there's a lot of other things that come into play. When you're dealing with the stock market, I mean, God, it almost seems arbitrary how stocks can go up and down and up and down. And you don't have that specific person that you know and trust that really is controlling that for you. So there's just more of a control. And again, as a passive investor, it's not you that's necessarily controlling the business plan, but you're putting your confidence in somebody that you trust who is controlling that business plan. So there's a little level of risk mitigation there, as long as you're taking your time to properly vet your sponsor.
That's great that you share with us the risks associated with investing in multifamily syndication and the ways to mitigate them. Another risk I would like to hear your opinion on is the impact of COVID-19 and its effect on multifamily apartment investing. Should we invest during this time with so many unknown factors?
Yeah, I mean, there's a lot to think about right now with COVID and everything going on. I think it's important to be very cautious what you invest in. I don't necessarily think it's a time to just not invest and just wait. I mean, if you feel like that's what you need to do, then that's everybody else's decision. Me personally, there are deals out there right now. There are good investments, and you just have to be very careful in what you're investing in. And if you can find syndications or whatever it may be with, where there is a very obvious and easy value add play, then you're really mitigating your downside.
What are you planning for the next 5 years, Adam?
Yeah, I'm going to continue to invest. If there is a correction here, that's just going to allow more opportunity to find discounted deals to invest in. Like I said, I'm invested passively in those 2 deals. I'm planning on taking those returns that I see from those deals and just kind of rolling those back into other deals as they come up. So I'm going to continue to network with operators and try to find deals that are coming in and invest those so I can just keep increasing my passive income.
Great plans. So you keep investing and repeat so you can grow your snowball and maybe retire at a younger age to enjoy life.
Yeah, exactly.
As for now, the plan is to continue working on your corporate job while also evaluating the deals coming from the operators, so you can have both active and passive income streams flowing in.
Feed my kids is going to be expensive enough as they start getting older.
And they are growing faster than we can realize.
I know.
And their needs increase too.
Yeah.
And before you go, Adam, what final piece of advice would you give to a corporate employee just like you to start making their money work for them and grow their wealth through passive investing in multifamily syndication?
Educate yourself, at first. I love multifamily. I think there's a lot of benefits to investing in multifamily. Somebody else might like something else, but I think it's important to educate. There's resources out there like Bigger Pockets you can go to and start looking at different ways to invest. You can start going to attending local meetups, as we talked about earlier, and just start networking and find out what other people are doing. And a lot of times, I mean, people love to talk about their investments if it's going well. So it's really easy to dig out information on who's investing in what and the different opportunities that are out there. So that would be the first place to start. And if you choose, multifamily is something you want to go down, talk to people actively investing like Delphine here and get to know people and start getting on their mailing lists and seeing those deals coming in and just familiarize yourself with the different terminology and the structure of these deals and how they work.
Thank you, Adam, for sharing with us your experience and the tips for investing in multifamily apartment syndication and start building our passive income streams. This is one way to get us closer to financial freedom.
Thank you very much.
Thank you for watching. You may have learned a few things about how passive investing in multifamily syndication can help build wealth and grow your investment when you are still doing your day job. See you in the next video.